stats on that deal. In fact, it's actually the second largest spirits and liquor deal targeted M&A on record, and actually the third largest Japanese outbound.
We're on the 14th of January 2014. Okay, so I made a full recovery now. I'm back into the swing of things. 2014, new year, new start. Tricky week. Tricky week so far. So far, so good. Plus 90 points and counting. And it's a Tuesday, so obviously that's good on the live analysis service. Doing well. Okay, so yesterday was a tricky one. Yesterday was a break-even day. Very tricky, very tricky day. Trying to read the Aussie, trying to short the Aussie, getting stopped out in the Aussie a few times. But eventually, obviously pulled it back this morning and plus 90 points so far. So far so good. Last week was a fantastic week. 350 points I think I ended up with last week. So amazing 2014 so far. Christmas was a bit of a tricky one. Well, not a bit, quite a tricky one. It was very hard to read the last 2 weeks of Christmas. Ended up with 2 negative weeks. Minus 200 and minus 80, so that wasn't good. Obviously last week's 350 points made up for all that and more, but that's trading, folks. Obviously a light volume environment, a lot of manipulation, a lot of distortion. There's no it's very hard to read the tape. Okay, it's all part and parcel of trading. You'll get good periods and you get bad periods, so it's not a concern. Okay, and so basically let's have a look at the FTSE 100, then let's see exactly where this is going. Okay, I did put a video up, I think last Thursday I think it was, and I was expecting this this bull flag here to fail and the markets to come back and retest the 600 level, is it, or 6660 level? Yep. Okay, obviously the market hasn't done that yet, given the fact that the NFP data caused the markets to short squeeze higher. Obviously we only had 75,000 jobs created, that then had investors' expectations drastically change with regards to tapering. They're expecting a pause in tapering, and obviously the markets short squeezed higher, and the US markets went to new highs, and S&P, Dow, etc. all ramping up. Okay, and that obviously prevented the FTSE from falling. Now at the moment we're just consolidating. Okay, let's start with the larger time frame first of all and see exactly where this FTSE is headed. Okay, so larger time frames, obviously we've got this key trend line resistance here. You've got a bull flag formation, the weekly chart. So slice it or dice it anywhere you want. The bulls certainly have a strong case here for a thrust higher to 6850 and to 6900. So I'm open to that. I'm not a perma bear or I'm not a perma bull. I'm just a day trader, folks. Okay, I have started up the live analysis, for the fundamental analysis service, which I am swing trading now. So obviously I do have inherent bias at times, which can kick into my day trading. But I always try and keep it independent. Any videos that I do, I always give a view for the next 24 hours. That's generally the case. Obviously, the markets can shift that and dictate. At the end of the day, I can't dictate to the market. My videos can't dictate, and nor can my charts dictate where the market's going to move. We can only anticipate based on the variables that we have at hand. So, for example, if the Aussie starts to spike higher, move higher, and commodities start to move higher, then obviously the FTSE will move higher. It's irrelevant what my chart states, and it's relevant what my videos state. As a traders, we react. Okay, we don't preempt, we react. And you can preempt to a certain extent as well via intermarket analysis if you have the knowledge of intermarket analysis. But the most important thing really is for us to react. Okay, so we're all reactionary. For example, yesterday I was expecting a sell-off. Yes, we got the sell-off. I then closed my shorts, and then I was expecting a bounce, going into the close. Unfortunately, we failed to bounce, and the markets literally just carried on diving on south. So, and that caused me to change my bias. Asian markets were down. I then subsequently shorted the FTSE, shorted the DAX, and I shorted the Aussie, all of which I closed for a healthy gain. Once I'd shorted the markets and realised the markets were into support, I then went long the FTSE, long the Euro, given the fact that we had higher inflation numbers this morning, and hunky-dory. Okay, Bob's your uncle. On the downside, nailed. On the upside, nailed. Okay, I'm a day trader. Okay, so from my perspective at present, I'm just giving you my scenario explanation at present. The way in which I see the FTSE 100 on a weekly chart, it's telling me at present that this is a bull flag, and the bull flag wants to move higher. Obviously, you've got resistance on this trend line here at 6800 and 6900. So on the weekly chart, nobody can argue that we're in a bearish market at present. This is certainly looking bullish. especially given the fact that we've got the FTSE 250 making new highs. Okay, the FTSE 250 is exceptionally bullish. So if the FTSE 250, which is obviously the small caps in terms of the FTSE 100, if they're bullish, then what do you think the larger conglomerates will be doing? Okay, so generally a good indicator with regards to the FTSE 100, just to confirm. So certainly looking bullish. Okay, so on the larger time frames, if I was a swing trader, you have to be in the bull camp there. Okay, now with regards to the smaller time frames, okay, we are consolidating sideways here. We could go either way. Okay, I'm not bothered which way we go. It doesn't really concern me for 1 second which way we go. Okay, from my perspective at present, all I can see here, we're trading sideways. Upper level of resistance is at 6770, lower channel support is at 6680. So watch out for those two levels. We are going to be trading within those zones. Okay, if the market obviously breaks 6770 and goes higher to 6800, then obviously that's resistance, and then you've got next level at 6820. Watch out for that, and then you've got the next level at 6875. Bear with me 1 second. I've got my two little ones coming in. Mr. Gordon Gecko over here, Mrs. Gecko over here. What's wrong, Shane?
It's wet.
It's wet. Okay, you have to go and dry it. Come on. Abu's working. Come on. Daddy's working. Go on. Come on. Come on. Downstairs.
I'm going to take my clothes.
Yes, you can. Okay. Okay. Go with Mama, and she'll help you. Close the door, please. Abu's making a video. Sorry about that. Okay, so back to analysing this market. Okay, so yes, day trading, going back to the FTSE 100. Okay, we're in a zone, so obviously we have to respect this zone, 6770 to 6680. Watch out for this level. If you break 6770, then obviously we know exactly what's happening next. It's a short squeeze, and expect this market to certainly start to make new highs. Okay, so obviously if you break 6680 on the downside, then the next level we're looking at is going to be previous support equals resistance at 6650 region. Then you've got horizontal support around this region here, which again is previous resistance equals support 6630, 6650. That opens the way for that. Okay, again, okay, so let's just leave it at that for now, because obviously these are zones that we've not really encountered yet. Okay, at present, just stick with those two zones. Obviously, we break higher, we go higher, we break lower. Obviously, we go lower, and you've got the two levels that I've given you there. Okay, so let's go to a smaller time frame. Okie dokie then. So smaller time frame, what can we see here? It's trading sideways. Is this a consolidation for the next leg higher following the FTSE 250? Could be. Okay. Is this consolidation, exhaustion for the next move lower to hit the 200 MA, possibly go lower? Could be. Okay, could be. Given the fact that the Nikkei has been smoked overnight and yen is starting to strengthen, that certainly obviously increases the argument that we're going down, given the fact that Mr. was it Colchoretta? I can't remember. One of the Fed members yesterday started talking tapering again, saying that the jobs report was just an anomaly, and he certainly sees sustained growth. We have retail sales coming out in the US today. Obviously, if that indicates growth, any signs of growth, then tapering is back on the agenda, and the QE junkies will run for cover. Okay, so if they run for cover like they did yesterday, they must have the retail sales. That's why the market sold off quite hard with conviction yesterday. Remember, folks, this whole game's rigged. Okay, these individuals have access to data and information well before you and me. Okay, that's why it's very important to try and focus on your charts and try and read between the lines via intermarket analysis. Okay, it's not a level playing field. No way is it a level playing field. Okay, so these individuals certainly have an upper hand. So it's very important for you to learn intermarket analysis so you can read their hand. Okay, and see exactly what they're up to. Okay, so 60-minute chart, like I said, is trading sideways, same as the daily chart. We're in this zone, we're being respected. Obviously, I shorted the market on the downside. Beautiful gap fill, nailed it on the downside, closed the shorts. Then I went long, nailed it on the upside. Fantastic. Okay, so plus 90 points so far. So far, so good. Life is good. Okay, so again, follow your fundamentals, follow your fundamental analysis, follow your technicals, and obviously utilize intermarket analysis to understand exactly which direction this market is going to go. Okay, so as you can see here, technically perfect. We had a H&S formation. The right shoulder held 75%. That's why I was on the bearish side. Okay, we have created a gap. We broke the bullish channel. We are potentially here retesting a neckline at the moment. We'll see exactly what plays out. At present, you've got higher inflation in the Eurozone. That will put a damper on the European markets, because that will force the euro higher. Euro goes higher, exports get hit, Okay, and obviously the eurozone economies can start to move south. So there's a lot of fundamental currents at play today. Again, if you really want to understand this, then I have the mentoring program. I encourage everybody to come and join me. I go through it in detail. I give you a base. I give you a foundation in which you can obviously build your own future, build your own trading career. There's a lot of charlatans and cowboys out there teaching. That's one of the reasons why I was forced to teach. Okay, obviously from requests from my students and potential students, etc. I teach a very cost-effective way. All I charge is £300 for a 4-week course via Skype on a one-to-one. So that's something of you, especially those novice traders or intermediate traders that really want to educate themselves in intermarket analysis and expand your knowledge. Then really for £300, to be honest with you, the amount of time and the battle scars and the effort, etc., that I've put in, really you're going to avoid all that. Okay, and nowadays £300, what is it? One trading. It's only one trade. It's one trade, and that one trade you'll probably make those same mistakes over and over again. You blow your trading account. Whereas if you learn into market analysis, at least you have the foundation of understanding the markets. This is the big problem in this day and age, is nobody wants to learn. We have a dumbed down style of education. Okay, nobody wants to learn. That's why these indicators are very, very appealing. Individuals want to embrace indicators because it doesn't it obviously prevents them from actually thinking them for themselves. Okay, think for yourself, trade for yourself, become independent. I try and encourage people not to rely on anybody unless you're educating and empowering yourself, and obviously for the betterment of yourself, and obviously eventually to go solo yourself as well. That's basically what trading is all about. Okay, so the mentoring program is certainly there. I'm going to devise a fundamental analysis service, not a fundamental mentoring program, sorry, just to focus on pure fundamentals, because a lot of people have a tough job at dissecting and understanding which way the markets are going to go based on the economic data. Now, obviously, I've got the benefit of having an economics degree, which obviously aids me and helps me to a large extent in filtering through the noise and understanding exactly what it means to the currency market. Okay, so for example, this morning I went long on the euro at 136.60 based on the higher inflation out of Germany. Okay, and that obviously propelled the euro higher, caused a short squeeze. And given the fact that we also had the weak US jobs data as well, that's obviously a damper on the dollar, and the euro certainly squeezed higher. Okay, so that was a nice trade. Okay, that was a nice trade, plus 33 I think it was, or plus 30 on the first, third, and obviously 2/3, etc. Scale in, scale out. So that's basically how it all works, folks. Okay, so again, if you want to educate yourself in real time, then I have the live analysis service as well there, designed for you as an individual to educate and empower yourself whilst trading and learn on the job. Okay, that's the most important thing, learning on the job. Okay, so with regards to the FTSE, we gap down, HNS formation triggered, gap fill, closed. The HNS was 6770 down to 6730, minus a 40 from 6730 from 6770, and that technically gave you a target of around 6690, which has been hit. So obviously once you hit a HNS formation target, what happens? The market short squeezes higher. Okay, that's exactly what's happened. We short squeezed higher. Okay, so where do we go next? So if we take the high, take it down to the low, we've retraced at present. We retraced almost 50% now, so this will be resistance. And you've got the upper neckline resistance here as well. You've got the 200 MA resistance. So this level here from 6730 to 6740 solid resistance, and it may well be a level that I might take a short at. Given the fact that I've already made quite a substantial amount of points and I'm already long on the euro at present, I think I'll call it a day. But if this trade is there to be made, I may well make it. Okay, but for now, I'm happy for the day. I'm plus 90 points. It's only 2 days trading so far this week. Monday, Tuesday, and already plus 90. Almost hit my target of 200 points, so not too far off. We'll see. Okay, we'll see. But for now, certainly keep an eye on that level, 6730, 6740, retest the neckline. Obviously, you've got the unfilled gap above, so we do need a fundamental catalyst to close that. At present, we do have a semi-fundamental catalyst to a certain extent of the ECB confirming growth. Okay, now. The only other problem that we will have, given the fact that this data is just coming out right now, folks, let me just share this right now, actually. given the fact that it'll be in real time. Okay, so UK PPI December input prices, NSA 0.1% versus minus 0.2. So that's not a good sign, okay, with regards to PPI, because that means higher inflation, higher currency hurts exports, increases the chances of interest rates going higher, which obviously hurts the FTSE, okay. That's number one. Second one, December UK CPI 2% versus 2.1%. That's good. That's positive. Why? That puts a damper on the currency. Damper on the currency means interest rates go lower. Interest rates go lower, then obviously cheaper funding, cheap money to you and me as more in terms of mortgages. Okay, our mortgage payments are kept at bay. Okay, and so that's certainly good in that from that perspective. Given the fact that we were fearing a higher interest rate, okay, so a higher inflation rate rise. So the PPI is certainly negative. The CPI is certainly positive, okay. So these are our loggerheads, okay. These are loggerheads to one another. So how do we interpret that? The way in which we interpret whether it's bullish or bearish is by looking at the actual currency chart. Currency chart on the daily chart of GBP USD is currently showing a HNS formation. You have a bear flag forming there at present, okay. Given the fact that CPI was lower, and this is tricky right now. Okay, 10 minutes. Let's have a look. 10 minutes. How are we deciphering this at present? So 1 second. Why is this messing? Why is my chart messed up here? Let's go to a 60-minute chart. Okay, here we go. So 60-minute chart at the moment certainly looking bearish, given the fact that the inflation data is not as CPI is not as high as expected. So that should certainly force the FTSE higher. Which it is. We're currently at 6732 now. We're into that soft spot zone. Okay. So inflation data, this is a mover. This will be a big mover. So given the fact that the CPI is not higher as expected, that's a positive, but PPI is higher, so that's a negative. So what we can do is rely on the interpretation of the currency market, and the currency market at present has sold the sterling into that. Okay, so that's obviously negative then for sterling, but positive for the FTSE. So keep an eye on the FTSE and sterling and see how they move in tandem. Okay, but certainly there's a positive and a negative. Okay, so that's certainly something that we need to interpret. Obviously this 10-minute candle ever since this came out has been negative, so a lot of individuals were expecting a higher CPI or potentially a higher PPI as well. So these are all things that we must take into consideration. So let's just see our Twitter feed. Core price in UK down to 1.7%, second lowest number in 4 years, so that's definitely negative for the currency. UK correction, CPI is the lowest, not the worst. Okay, right. Let's keep reading here, folks. IEA says nuclear talks with Iran postponed to February the 8th. Okay, that's going to be positive for oil, so that'll be positive for gold and oil. So keep an eye on that. Okay, let's just keep going down. Continues part of a dip on the cash. UK inflation now a 4-year low of 2%, but that's still double wage growth, so the income squeeze continues, etc., etc. So yeah, okay. Overall, weaker inflation. That's definitely good for the FTSE. The biggest downward impact on CPI came from food and non-alcohol beverages. Okay, UK inflation falls 2%, reaching the Bank of England's target. Okay, so inflation rates certainly falling. Okay, so let's just keep reading here. Okay, what's interesting here is let's just quickly go over to Daily FX and let's see what the expectations were for CPI. So CPI were 2.1%, so below expectations. The core was 1.7, below expectations 1.8%. CPI 0.4, below expectations of 0.5. Okay, so basically everything's below expectations. Okay, that's why the sterling has obviously fallen. This is actually bullish for the FTSE now. Okay, so this catalyst will now, given the fact that the FTSE 250 has already been making new highs, the FTSE 250 gap should close. Okay, and the FTSE 100 gap should close as well. So this is going to be an interesting. Given the fact that we've already bounced higher from the 6690 gap fill region, that certainly has factored in quite a lot of the fall in the inflation rate, obviously, and the rally itself as well, because we've retested the neckline. If 6740 and 6730, anywhere in that neckline, so basically the previous support equals resistance is 6730 to 6735. Provided 6735 holds a resistance, then obviously we'll retrace. Once we retrace, we will eventually close that gap. Okay, can that gap offset the negative sentiment from Asia, given the fact that Nikkei was down 3%? Yes, it certainly can. Okay, because that is one hell of a catalyst. Because basically what he's trying to tell you now is that interest rates will be kept at bay because inflation is not a concern. Okay, that's one of the problems that Mr. Carney had. Okay, inflation will be kept at bay, therefore there's no concern about higher rates hurting growth. Okay, and obviously mortgages and disposable income, etc., etc., and that will obviously be bullish for the FTSE. That should eventually close the gap here at 6760. Once the gap is closed, and that's factored in the lower inflation reading, and then we'll just take it from there. Okay, so that's basically trading, folks. That's how I interpret the market on a day-to-day basis. Given the fact that the ECB has higher inflation, that is a concern with regards to the Eurozone. So that's another fundamental current. The way in which we interpret that is higher inflation readings out of Europe means lower chances of a rate cut. Lower chance of a rate cut isn't exactly good. For the Eurozone indices. Okay, now the other edge, or the other side of the coin, is the fact that you had one of the members of the ECB coming out stating that let's just bring this up for you. Let's just have a look. Where is it? Where is our? Let's bring this up quickly. Give you an insight with regards to the fundamentals again. Okay, Italian consumer prices 0.2%. Where did I retweeted that earlier on today? Okay, here we go. So we had Germany's. Where are we? 1 second. Quickly go across. 1.7, 1.8%. Turkey's going. ECB, here we go. ECB Nowotny. Monetary policy help boost recovery in the Eurozone. Okay, so that's obviously a bullish article. That certainly helps the Eurozone. So on Tuesday, the Eurozone economy could grow more than projected in 2040, and the perspective for entire Europe were improving. It's to stress the central bank's monetary policy contribute considerably to recovery in the area. Maybe some countries like Germany, like Australia, might reach a 2% growth in 2014. So obviously that's bullish for the currency because it means higher growth. Hence the reason why the euro is strong this morning. And also higher inflation obviously again reduces the chances or likelihood of any talk of deflation, and obviously because given the fact that inflation readings came out stronger than expected, also reduces any chances or likelihood of interest rates cuts. I don't know where they are. Cool. Okay, that reduces the chances of any interest rate cuts. Okay, which again creates more short squeezes for the euro, and the euro will obviously propel higher. Remember, it's positive euro but negative eurozone indices. Okay, so that's one argument for eurozone indices to fall and the euro to rally. Okay, well, the other counter argument is given the fact that you've got higher projected growth by Mr. Nowotny, and easy monetary policy will stay. Therefore, that could be interpreted as bullish for the actual European indices as well. Okay, but from my understanding is, if I was a trader right now, I would be long FTSE based on that information I've explained to you, because you've got lower inflation, therefore interest rates remain low. The FTSE will obviously propel higher. With regards to the Eurozone, European indices such as Germany, CAC, etc., they will move lower. Okay, their bias is lower. Why? Because of a higher euro, lower chances of interest rate cuts. Okay, the higher probability of rate cuts now, rate rises. Sorry, in Europe. Okay, especially with the inflation readings. So long FTSE, short Europe or European indices. That's the conclusion at present. So that's the way in which I would interpret and understand the markets in real time. Okay, and that's why I'm currently swing long on the euro, looking for around the 137.50 on the euro today. And I'll certainly will be looking at 167.35 is cracked. I'll be looking to go long on the FTSE for the gap higher, and most probably a new high as well. Okay, so these are all things that we're watching and observing in real time, and that's how I trade, folks. Okay, so hopefully that's giving you an insight there of basically how I day trade the markets. Again, like I said, if you want to join me, you're more than welcome to. I interpret the markets in real time via the live analysis service that exceeds 200 points a week and has been doing so for the last 7 years. Okay, risk on, risk off, wax on, wax off. Goodbye now.